Thank you very much, everyone, for joining us for this afternoon's Nasdaq Dorsey Wright webinar that's going to be focusing on score-based solutions, specifically looking at fund scores and the asset class group scores page. This is going to be an additional part of this webinar series that we're having over the next few Thursdays, focusing around fund scores, what they are, and how different ways that we can use them on the platform. So today we're going to be kind of laying the groundwork, getting up to speed with how we calculate the fund scores, and then how we use those through some score-based rankings that we have on the system. We're also going to be going over the fund score method models next week, and then in the subsequent week after that, be focusing on the team builder page and some functionality there. So to kick things off today, my name is Ian Saunders, and I'm joined here by Eric McCardle and Steve Raymond. Steve is the mastermind behind the scoring system, and we felt that there would be no better way to learn about the background of the fund score, how it came to be, and the inspiration behind it from the man himself. So without further ado, we'll kick things off over to Steve here to give us some inspiration there behind the fund scores.
Yeah, thank you, Ian. I appreciate that. Very kind words. Yeah, it brings me back to, I would say, way back in far away yesterdays, where the challenge in the older days was to make sure you had a charting system. And for those advisors that have been around long enough, you are or maybe aware that the only charting, point and figure charting done on mutual funds was from a company called Chartcraft. And that's kind of what I had to work with, kind of to look over and see how we could get involved in more charting at Dorsey Wright. And what that led to is my feeling on charting mutual funds in a point and figure way was that the Chartcraft scales were pretty good, but we needed additional scales and some things I felt would better express the intermediate and long-term nature of mutual funds. And so we put together quite an extensive charting system. I mean, extremely extensive. But what that led to was this concept of, oh my, so advisor has, multiple funds available to them, possibly, very big lists available, through the corporation they work for. And it became untenable to think that, we're going to have to, literally chart hundreds of funds to kind of figure out, how to put an asset allocation together. And I think that is really the birthplace of, the question or the answer, which is there a better way? And I think that, the better way through was to, put together a scoring system so that the score itself would read all the charts for us, both relative strength, regular charts, trend lines. And then, of course, I've always been, a fan of some sorts of Morningstar. And so I was well aware of everything that they had done, as well as Ibbotson, as well as Thompson, as well as anyone else in the game in those days. So that kind of led to this, what I think a breakthrough, which would be, let's do a technically based score system. Never been done before, where, certainly fundamental ratings and things like that have been around for decades. This idea of technically assessing a mutual fund, or you could say a collection of stocks managed actively or passively, just wasn't there. But enough good helps were laying around to say, hey, I think a rating system would work. Then that led to a kind of a 1 through 5 attribute system, and I still felt that that's not expressive enough. It's like dealing with Morningstar 4s and 5s. I mean, there's hundreds and hundreds of 4s and hundreds of 5s. I mean, so when you see a list of those even integers, it's still hard to psychologically work through that kind of rating system, let alone the fact that those rating systems are not technically based, or certainly were not at all in those days. So that led to a decimalized integer system of 0 through 6. It's basically like a 1 through 5 rating system with tails on either side to express the extremely weak and express the extremely strong outperformers. And that's kind of the genesis of of that idea that every fund, would go through a standardized system of scoring charts, scoring RS charts, looking at moving averages, scoring that, and then a vast array of percentile ranking to look at how individual funds do against various groups that they compete in. And that collection, I think that we could now say is called Fund Score, which is 100% technically based on the fund's own prices and how that moves with and against the marketplace. And I think that that's what you have here. At this point, the Fund Score system, does not really read any fundamental data. I think Morningstar and other purveyors, do quite well there. And so, you could think of the Dorsey Wright Fund Score system as very complementary to be used along with other rating agencies that look at different things. And so I think that we fulfill that niche in the market. Generally, the Fund Score, has kind of breakdowns to it. A third of it is, price trending, and then, 2/3 relative strength. There's an overweighting to the relative strength aspect. Half of that 2/3 of the relative strength, or you could say 1/3 of Fund Score is peer analysis. How strong am I against peers? And then the other important part is how strong am I against the main marketplaces that I compete in. And so what that tells you right off the bat is that, I think, or we think, or Dorsey Wright thinks that relative strength should be overweighted when you're evaluating a fund. And that's exactly, what the Fund Score algorithm does, giving preference to the relative strength aspect and also giving preference to trending and price trending, because those are important key concepts. So you can think of the Fund Score as equally moving around a third on these important dynamics. And by using the rating system, we're able to place where a fund belongs in its competition, and be able to make judgment calls quickly on, not just one fund, although that's obviously what we do, but on groups of funds, lists of funds. And I think people that don't use the Fund Score system can appreciate what I'm saying when I say this, that it is very difficult to go through large lists of funds and you don't have anything to key on technically to distinguish between them, because there's a lot of good names out there. But that doesn't mean that good name is addressing this market well. And there could be this idea that we get hooked to names or continue to use only the same names of a fund from a family and not realize that its technical standing is good or is bad or was good and then turn some other direction. And so this whole concept of staying on top of mutual funds, is really why the Fund Score system was put together. Keep in mind that, through that whole evolution, the ETFs came on board. So that grand idea is that ETFs trade at net asset value, just like mutual funds do. And so what you actually have here is a rating system, a whole collection of mutual funds and ETFs, all swimming together in that competition field, all being scored with a soulless score algorithm. That way you can divide up those universes and put them to good use. But that's where it came from. And I think that what I'm trying to point out is the great need for something that wasn't there in the first place. So I think that Dorsey Wright's a leader in a technical niche of disciplines out there, and we certainly applied this rating to those assets to help us with our asset allocation, as well as models, as well as all these other endeavors. Back to you, Ian.
Wonderful. Thank you there, Stephen. As Steve mentioned there, we're looking at both ETFs and mutual funds there for the Fund Score. And so I think Eric was going to provide some more context here around an example of a score and those different factors that go into the trend analysis, the peer relative strength and the market relative strength there that Steve just went over.
Absolutely. So thank you for the color on that, Steve. I think that gives us all a really good intro as to what the Fund Score concept is based on and what we were seeking to accomplish when we set out to create that. For you all at home, when you are looking on the Dorsey Wright platform at any ETF or mutual fund on the system, the Fund Score is going to be located in the top left-hand corner of the fund's trend chart page. And this is going to be very similar to the technical attribute in terms of the location, right? Kind of measuring similar things, except as we talked about, prior, looking at it from a much more granular level. And we'll take a look further under the hood momentarily. But we wanted to start with this example using PDP, the Invesco DWA Momentum Portfolio ETF, just to kind of show you how to interpret this on the Dorsey Wright platform. When we're looking at the fund score concept, as Steve mentioned, the scores range from 0 to 6, with 6 being the best possible score. A 3 or better is considered acceptable, whereas a 4 or better is considered optimal. And so right there, you have almost enough information to make a decision on an investment, right? We wanted to make sure that the fund score is comprehensive enough so that you have a pretty clear picture of technical strength from that trend or that price movement component, as well as the relative strength component, and really give you, the end user, a ton of information in one number. So in the example here, when we look at the fund score for PDP, we see a 4.85, which, as mentioned before, being north of that 4 score level is considered optimal. Another point to consider when looking at the trend chart is the score direction. Now, this is going to give you some context as to how that score has either improved or declined over approximately a 6-month period. And we're really looking for movements off of relative highs and relative lows for those scores. So it just gives you a frame of reference as to where the fund score has evolved during that period. Initially, you can click on the score, and if you want to be able to dive in a little bit deeper on day-to-day movements, you can see that here. Now, you'll notice the score changes in some cases nearly every day, right? And even if that's ever so slightly, I think that that is one of the advantages to the fund score concept, in that you're able to get a live day-to-day update of relative strength, of trend, and have a measure that is a little bit more dynamic, right, than some of the other indicators or relative strength concepts that we show on the rest of the website. Additionally, when looking at the top of the chart, you'll notice that we'll list the fund's peer groups. So you have a quick reference for, okay, how is the fund I'm looking at scoring relative to other constituents around the world or in the fund's peer group, right? And so in the case of PDP, we can see that we are outscoring all 3 of the peers that are represented. To dive a little bit deeper into the fund score concept and maybe peel back some of the onion layers relative to what we've talked about so far, you can click on ETF or fund information on the side of the trend chart. And from here, there's a couple of areas of note. In addition to performance percentile ranking, which is really just, not necessarily a fund score concept, but gives you a frame of reference for performance of the fund relative to its peers, I want to draw your attention to this middle part of the page, or the speedometer section. And this is a really helpful utility in that we can see the score history, the direction history, as well as the fund score details. And so starting with the fund score details, this is where you can really dive in and say, okay, what components of trend as well as relative strength are attributed toward that overall fund score? And of course, the weightings are proprietary as far as how they go together, but again, you can kind of view this as a third, and a third. So that's under fund score details. Additionally, as mentioned, the score history gives you a graphical representation of that fund score for the individual fund. And you can also add in additional tickers at the bottom here in case you want to compare how they basically played against each other. And the same can be done for directional history. So now that we've looked at an individual example of the fund score and dove a little bit deeper into how that score is calculated, we're going to pivot over and talk about how we do this on a broad basis across different asset classes. So Ian, I'm going to have you take over with asset class group scores.
Perfect, and thank you, Eric. And so now that we have a base understanding of how we get at the underlying fund scores of the individual funds, again, looking at both ETFs and mutual funds, we just went over the ETF example. It would be just about the same if you were looking at a particular mutual fund, except that instead of ETF information on the left-hand side of that chart page, you would click on fund information to navigate to the respective fund score breakdown. But still, so all ETFs and mutual funds have that fund score that goes from 0 to 6, 0 being the worst and 6 being the best. So we take that information and we bring it over to this, what we call the asset class group scores page, which is going to be found up top under asset allocation. And then right beside Dolly, you'll see asset class group scores. It's going to be another relative ranking in a similar mindset to Dolly, but again, not looking strictly at relative strength. The Dolly page is relative strength based upon a matrix, whereas the asset class group scores page incorporates some of the trend analysis factor that goes into those fund scores. So what we're doing here is taking every ETF and mutual fund and classifying them into at least one of 135 different groups. So it's going to default here to what we call the macro view. But if you click on the little all groups checkbox up top under set view filter and then hit set view, you can actually see all of those 135 different groups spelled out. So it's going to be a pretty in-depth breakdown there. We get into the weeds of the individual domestic equity sector breakdowns, different countries or regions, different fixed income classifications, very kind of broad-based, meant to represent your full investable universe that you could potentially look towards. And so what we're doing for each of these groups is taking the funds that we classify in their respective areas. So we can see up at the top, biotechnology being the top ranked group currently. We're taking all the ETFs and mutual funds that we classify as a biotechnology fund, and then simply averaging their fund scores together, that score from 0 to 6, to give us a score for the group as a whole. So here for biotechnology, we can see as that #1 group, it's the only group score that's above the 5.0 threshold with an average score there of 5.21. And so then we take the rest of the groups, the rest of the classifications that we have, and rank them by that average score. You can see that they're going to go down the page by that score with the ranking coinciding with its position there. So biotech up at the top, you can see aggressive growth there at the 10th spot. And then we get just beneath that into, we see that the color changes. So as a quick note about the different colors you're seeing on the page, if we have that ideal fund score, as Eric talked about, when we have the fund score of 4 or better for the group as a whole, what we call that blue sky territory, right? And so those groups are going to be colored blue as long as they have a fund score north of 4.0. Then moving down beneath that, we see groups in green that are going to be still favorable with fund scores above 3.0, not necessarily as high as the 4.0, but still favorable fund scores, favorable group scores above that 3.0 threshold. Moving down, we see the yellow territory is going to be those fund scores from 2.5 up until 3.0 is going to be the kind of the yellow range, and then down beneath that, in low field position, below group score of 2.5, we get into the red territory of those more unfavorable groups. So in moving back on up to the top of the page to look at some of the different columns that you see, we can see that we have a lot of different information here outside of just that fund score ranking. On the left-hand side, again, we have the rank that is going to remain static with that its rank there by that average score. But there's a variety of other columns that we can see here that are all actually clickable as well. So the direction column, as you may imagine, is looking at the average directional move for the particular group score over the past 6-month time frame. Same time frame we'd be looking at there for the broader fund score, again, taking to that group perspective here. We can actually click on that column too to see, okay, let's see which groups have maybe shown the most kind of score improvement over the past 6 months from a near-term low. You can see there biotechnology is the #1 scoring group by that average score, as well as the #1 group by that direction. But an interesting thing to note, if you look at the left-hand side of the page, as I mentioned, that rank is going to stay static to this group's position based upon that score, regardless of what column you click on to sort by. So it's a pretty customizable ranking in terms of you can click on these different these different columns to sort by whatever it is you're looking to further in your analysis there. The percent OBOS, that's a percent overbought, oversold, looking at the average overbought, oversold percentage of the underlying funds in each group. So generally you may see those funds that might be higher scoring, may be more towards the overbought side given their recent strength. Whereas if you go down to the bottom of the score territory, likely to see more oversold regions, maybe negative scores down towards that territory. But again, not necessarily dependent upon that, just one thing to make note of there. When you see MOMW, that's the average weekly momentum of the underlying funds within the group. So again, looking at that weekly momentum reading that is going to be at the top of each respective fund chart page, and just simply again averaging those together to get, okay, well, what's that average weekly momentum that for the group as a whole if we were to aggregate that together. As you can see, most of those scores up at the top end of these rankings have been positive there for about 4 to 5 weeks. Outside of those fixed income areas, which have begun to show some negative score movement over the past couple of weeks here. Then the final data point that you'll see in that column is going to be combo, which is simply adding together the average score and the direction into one combo score. Again, you can sort it by that as well. And any of these data points are clickable. So you can actually bring up a graph of how that value has changed over time, whether you're looking to bring up a graph of how the biotechnology score has changed, or whether you're looking to bring up a graph of how the combo has changed, as we see here, adding together that average score and that direction to get at that movement over time. Those graphs are going to be adjustable to look at whatever kind of time frame you want it to, as far back as we have history for the score. You can see there's a nice little sliding bar at the bottom as well to really dig at different time frames if you didn't want to necessarily use the date plugins up at the top of the page. And so in moving back to the group scores here as well, we can have the opportunity to set some different filters. We know that 135 groups may be a lot to look at, so sometimes you might want to take a look at a focus area. Is that right, Eric?
That is right, Ian. And when you are looking at this page, as you mentioned and covered with some of the different column headers and different pieces of information, there's a lot of context here. So I think it's important to refine down to what you're looking for in terms of the investments that you're focusing on. And a couple of which that we think are worth pointing out to you today are US styles to start, which are going to look at domestic equity, size and style box constituents. In this picture here, we see that large growth in the US stock universe is scoring the best, the only group above that 4.0 threshold. Whereas we can see that the value style is generally near the lower end. From here, you can use the sorting capabilities to get a feel for what is improving or declining. So a good place to reference. Another one of our favorites, just to have a reference point for Dolly, our other relative strength indicator, would be Dolly style filters. So if we click Dolly style in the top left and then set view, this gives us a little bit more color regarding what the major asset classes in Dolly are looking like from a fund score perspective. Now you'll notice we do have the S&P 500 index funds group in here, as well as some additional granular groups that are a little bit more focused than what you see on the Dolly universe. But we do provide that on here for some additional context. And the last one that is one of my favorites is the sectors filter. So as Ian pointed out earlier, biotechnology and healthcare pretty firmly in the top spot of not only the sectors, but also the overall rankings. And we can kind of get a feel for what is playing well and what is not, right? Again, one of my favorite things to do is come in and sort by direction. And this is a good way to check and see if the areas that you're looking to add money to are trending upward from a fund score perspective, right? Or conversely, if you have areas that you may have had exposure to that may be former leaders that are showing some weakness from a score directional standpoint, definitely an area to watch for. Now, let's say you've come to group scores and you found a particular group that you think is of interest and that you want to see where a good investable opportunity is within that group. It's as easy as simply clicking the Ideas button directly to the left of the group name. And we're going to aggregate all of the funds that make up this group, sorted automatically by that fund score, to give you a really quick picture of what is working and what isn't within the group. So this is one of my favorite places to come for idea generation, because I have the context of the market, and then I have the context of the underlying inventories right at my fingertips, all in one place. I don't have to go too far. And from here, if we find a fund that we like, we can simply hit the Send To button, because I don't want to own every biotech fund. I'm going to uncheck, and then I'm going to check the one or two that I want, and I can send it to a portfolio from here. So now that we've looked at the asset class group scores homepage and we've gone over some of the different filters, I want to pivot to another concept that has really taken root here, that we use from not only an overall market gauging perspective and telling us where the strength and weaknesses of the US equity core and money market as an asset class, but we also then take those concepts and we put them into offense defense indicators that are used in some of our models. So for that, I'm going to turn over to Steve again to talk us through the inspiration for why we're tracking the money market and the US equity core percentile rank and what we're looking at there.
Yes, thanks, Eric. I appreciate that. You know, it brings me back to the day where, you know, like I said, some years ago, when money market or the risk-free rate was never actually included in a lot of different technical shops or fundamental shops, the idea of gauging things to the risk-free rate was not really a concept well implemented. And we did that, you know, in Dorsey Wright, you know, some years ago, where we tracked money market asset classes and funds and different, you know, vectors on money market to make sure that, you know, how is my fund or my portfolio doing against the risk-free rate? And, you know, if it's not doing so well, maybe I need to beef up that fund lineup to, you know, to do better than just holding cash on a relative strength basis. Well, that whole concept led to, you know, really instilling money market as more of a pillar of something to look for. And the asset class group scores is one of the right places to do that work. So for example, you can see in the upper left-hand corner of the asset class group score page, there are rankings in a light blue box. One of them is the money market percentile rank. Now, how that's achieved is to find out where money market is amongst all these, you know, 130 some asset classes that Ian pointed out earlier in this presentation, and then find its slot or its rank, and then convert that rank into a percentile rank from 0 to 100, 0 to 100. The you know, the key thing to, you know, remember there is that the money market reading here, because we do have various money market readings across the site. Dolly uses some other things that you may also use. This one is actually indigenous to asset class group scores. It's how the money market asset class travels in competition with all these investable asset classes, which are, again, made up of mutual funds and ETF constituents, to get that reading. And so we found that by tracking the reading of the money market group, we're able to pinpoint zones of offense, zones that are more questionable, zones of defense, zones of heavy defense, as that group competes with at-risk groups, you know, all throughout a trading year. So it's been a very valuable metric to watch, and you only get it here. I mean, it's derived by the asset class group scores, and asset class group scores are unique to Dorsey Wright and the Dorsey Wright experience. With that, we also track another key component, which is the core of the market, as represented by the S&P 500 related funds. And that could mean that the S&P 500 itself, a value or a growth variation of the S&P 500, equal weighting or cap weighting variations. All these different variations are included in the cloud of funds known as the S&P 500 related funds. And that represents really the core of the market, because my experience, or I think our experience, is that knowing where the core of the market is vital from a percentile rank or relative strength reading point of view. Now, that doesn't mean you have to have a very strong core to be successful in a relative strength game plan. But it does mean you need to know where it is in order to adjust your game plan or be in harmony with the market. So one of those factors up in the upper left also is the U.S. Core percentile rank, and that will tell us 500 group is traveling, and we use that number to help us with offense and defense in the entire marketplace. I think it's also helpful to the advisor to know what kind of market type he or she is in. For example, currently, and has been the case for some years, is that the core percentile rank is very strong, a very high number, which means strong against other asset classes around, so I could use a phrase that the current core percentile rank is at 83, 80, or you could round it off to 83. You could say that the core of the U.S., the S&P 500 core is relatively as strong or stronger than 83% of the asset classes all over the world. That's an important fact to know, because that steers your allocation, whether it's via models, which are automatically handled by Dorsey Wright, or models that you've put together, or understanding which strategic allocation mix to choose that your firm provides. Knowing how strong the core is a very key component to having success in any of those endeavors. Keep in mind that most firms predicate their strategic allocation with the assumption that the core is always strong. And I just wanted to point out that's why we track the number, because this is not the case. There are many eras in the market where the core dips below the 50 or the 40 percentile yard line, moves in that lower half or resides in that lower half of the asset classes. And that's a very important thing to know if that ever occurs or when it occurs, because that could mean that we need to do a strategic reallocation. And those that do not strategically reallocate will suffer for missing out on that important market type, which would be a low core dominance market type. At this point, take this market, for example, we've had a relatively very high core reading, very strong, and that gives us, some confidence that we're still on the right track working with equity positions. And in all cases, many of our models do read both the core percentile rank and the money market percentile rank to determine whether offense or defensive is required in any short or intermediate period of time. And it gets it straight from here, right off the asset class group scores page, just like you can see, or just like you do also each day. So again, just to reiterate, the big point is that the core of the market and the money market, which represents the risk-free rate, are important concepts. Here, these readings are indigenous to the asset class group score fabric, and they're extremely helpful in both guiding models as well as to the advisor by hand or by eye to understand how to manipulate a strategic allocation or find a way to take advantage of the market by having the proper information of what market type you're in. Back to you.
Wonderful, and so thank you for that context there, Steve. And so as Eric's showing here on the screen, you can click on those links on the left-hand side, and you can actually, once you're in these graphs, you can see the historical score changes over time, or the percentile rank changes rather over time for those respective groups. But you can actually, as Eric had done here a second ago, you can click on a particular area and drag across the screen to highlight movement that you think might be pertinent to view. So maybe if you think, okay, well this market environment feels a lot like this market environment a few years ago, let's go in and compare how the percentile ranks changed at those times. Well, you can actually go in, click and drag this graph here and view how that percentile rank has changed. As you can see from the graph here, the money market percent rank, as Steve mentioned, is something that doesn't tend to tends to stay low in your normal market environment, but does spike up, and we've seen it move a little bit higher here recently, moving above the 50% level briefly, and before moving back below 40% actually following trading there yesterday. And you can do the same thing on that U.S. equity core percent rank, as Eric touched on there. You can come in and view the graph history. As Steve had talked about, we've seen a very strong core equity market over the past 10 years, really. But that wasn't the case for really the prior 10 years, a kind of lost decade for domestic equities, if you will. You can see the percentile rank there for the core U.S. equity market rarely moved above 50% from that 2004, really up until after coming out of that market bottom there in 2009. But since that time, it's really moved below 50%. So another way to highlight those different kind of market environments that we see, and some further analysis that you can use for that broader market picture. As Steve mentioned as well, we do use these two percentile ranks, the money market percent rank and the U.S. equity core percent rank, in some of the cash triggers that we have for the FSM, the fund score method models. So we'll take a deeper dive into that in next week's webinar. But as Steve mentioned, those models are going to come in and they're going to look exactly at these same percentile ranks that you're viewing here. So if those are something that you follow, then this is going to be where you can come in to check on those percentile ranks outside of the typical model evaluation there.
Excellent. And one piece of color I want to add to this, because I think you both have touched on it in different ways. When we're looking at the strength of the core or the strength of money market, and having historical context, I think is very helpful in remembering what certain market environments were like when, say, a core reading was low, like the mid-2000s, right, or the lost decade for domestic equities, as Ian pointed out. It's important to then use group scores and say, okay, if the core is not working, what is, right? Or if money market is moving above things, what is it moving above, right? And so kind of keeping those as your floating benchmarks to find strength or avoid weakness is very helpful. And when we look at that in a market environment where, let's say, international equities or commodities tend to be the favorite asset class, or even in today's environment where we see a lot of the fixed income groups kind of near the top, that gives us an idea of where strength is outside of the core that we may feel comfortable allocating money toward.
Eric, and I wouldn't mind trying to reiterate a point I think that we made some moments ago, and that is that when the core of the market is very strong, what you tend to find in that market type is that you are doing pretty good and things are pretty smooth and generally not chaotic. What you find in a core dominant market is it's just hard to keep up and outperform the benchmark. That seems to be the major strenuous part of a high core dominant market. But if you know that you're in a high core dominant market, then you can in some sense have the allocation, alter the allocation to take advantage of those groups that are exceeding the market in relative strength. And I think that's a kind of a simple story to tell. Now, when the core of the market becomes less strong or notably weak or inferior, like it was really in the second half of 2007, even before you come into 2008, the core of the market's at the bottom of the page. When you come into that kind of market, what that means is we've got to go elsewhere. Now, the reason I wanted to reiterate the comment is, most firms out there, most of the firms we all work for, you all work for, might recommend strategic allocations. And those allocations are really based on the premise that the large caps or the core of the market is in good shape. And so they do put a lot of weighting on large cap core in the average, strategic allocation at all times. So if we find ourselves, and we will again in the future, in a low core dominant market, it's going to alert us that we have to change that mentality, meaning you as the advisor have to go and say, yes, I see what my firm's recommending, but I'm going to have to alter that allocation. I might have to alter it to add a lot more. I might have to alter it to add a lot more international. And I'll just be honest with you, I think that to do it's just uncomfortable because you've got not only to educate your clients, which is not really hard to do. They say, yeah, I believe you, let's go with it. But I think that the firms and compliance and other ivory tower concepts will say, why are you deviating from, these wonderful strategic allocations that we've made for you? And I think that you got to take a stand and say, here's why. Because I've got to overweight the leadership assets around the world, and they're not really in the U.S. when the core dominance is low. So I just want to make sure that I made that point, that we don't track the core strength for no reason. I mean, there are multiple reasons we do so. One is to determine the market type we're in, and determine if we're on track with strategic or with tactical or dynamic allocations. So I just wanted to encourage us that that's what we have to do. Now, to make sure that today's reading that I haven't gone off the key mark is that we maintain that we are in a high core dominant market now. That means that most of our models will have more large cap than other things, and it will be U.S. based, and that's where we are, and I think that's where you are. And so what we would be looking for with our headlights down the road would be, are there any changes to that? If there's no changes in the core levels being strong, then we stick with this game plan. If there are changes in the core levels, then we need to migrate to new configurations in the allocation. Thanks for letting me clarify that. Back to you.
Perfect. And one thing that you can do using the tool as a way to kind of see where scores are trending is, we pointed out the graphing function earlier. You can actually do a customized graph of up to 6 different groups. So in this case, we have the S&P 500 index funds group, as well as all global and international diversified. We're going to select the graph link at the bottom of the column. And now we get some historical context regarding how these groups have scored relative to each other. So this can be a helpful visual tool in a number of different ways, not only from the macro perspective, but also if you're looking to present to clients, say, for example, how sectors have diverged away from the market or have led the market, right? So that if you pull up a graph, say, of energy versus the S&P 500, the last few years, the score differential is pretty significant, and that makes a lot of sense given the performance of the energy group as a whole. So, really a lot of possibility there with the graphs. And, another place we want to kind of pivot to here, just to show you as some additional context, we not only have average group returns up in the top left here, which are going to reflect the groups that we have shown on the last page. So if you want to know how different areas of the market that you filtered down are performing, you can come in here and look at this table and then change the dates if you want to as well. Again, keeping in mind that whatever you have filtered on the last page is what you're going to get on this page. And in that same vein, when we look at another tool, the group score report, and we mentioned earlier in the call that score direction is a very powerful tool, right? However, it's looking at 6 months worth of time context in many cases, and in your case you might want to see a little bit more on a near-term scale. Group scores action gives you the ability to do that, so it defaults to 30 days, again showing exactly what we had filtered on the last page, but you can manipulate this as well if you want to see different time horizons for that score change. So just some supplementary tools there. And Ian, there are some ways that you can really keep track of this and make sure that if there are days you can't get back into group scores, you're made aware of any changes. Do we want to point those out?
Yeah, absolutely here. One way in particular is if you're coming in on the page, and for some subscription levels, again, depending upon the subscription level that you may have, you're going to see 2 other columns on the right-hand side of the page that are going to say alerts and then port for portfolios there. The alerts column is a pretty useful column to be able to come in and set alerts on movement within the particular group. So if you click on that set alerts, let's say for the S&P 500 index funds, let's say you didn't want to necessarily, you didn't follow the models that looked at the core percentile rank but you wanted to not necessarily have to come back in and check on the 8% rank every day. Well, you could come in, click on S&P 500 Index Funds Group. You can see you have different options there for the movement of the score. And if you go down to the percentile one, you should be able to see there, you can move, let's say you want to be notified when S&P 500 moves below a rank of 40%. Right? That's one of the cash triggers that we use there. Part of the cash trigger that we use in the FSM models. You would then save the alert, and then the system's going to send you an email if that was to occur. So it wouldn't be something that you would necessarily have to come back in and check each day. You can do the same thing for any of the other groups that we have on the page. Again, that's going to be looking at the broader percentile for the out of all 135 different areas. So if you wanted to do the same thing for money market, you could do that as well. Or let's say you wanted to take a look at an individual group and how it compares to another one, right? You wanted to know, okay, let's see, when does S&P 500 index funds move below money market? You could do that as well. Look at that cross point for U.S. money market down here on the page to allow you to be notified if those were to cross each other, to move below each other, or whichever one you were looking to do. So some pretty customizable on the alerts feature there. But again, these are going to go into your typical alerts page. So whatever email you had that's tied in with the system, as soon as you save any of these alerts, it's going to the system's going to send you an email there if any of those were to trigger. Then the other column that you see there on the far right is an interesting looking. It's an interesting column with the ports view. So what this is going to do, it's going to go into the different portfolios that you may have there on the site and pull up those areas that might be corresponding to a particular space. So it'll go through your different portfolios and pinpoint those funds that might be held with or might be included within a particular group. So let's say you were coming in, you were looking to take advantage of a particular sector based upon the way it's scoring. You can come in and say, okay, well, I already have this particular area in these portfolios. Let's take a look at some other ideas, and you can jump over to the ideas tab. So a lot of different functionality and a lot of different things you can do with this asset class group score system, in addition to just taking a look at how the score rankings break down. In order to get a little bit more in the weeds here, you'll notice there's one final point that we haven't touched on up in the upper right-hand quadrant, if you will. That's going to be the quadrant analysis page, and I think Eric was going to touch on there.
Yeah, thanks, Ian. And that quadrant analysis provides a different type of visual representation for the groups that you have filtered below. This is revolving around the Doppler relative strength, or Doppler RS concept, in that you want to have a view of the playing field in terms of what is on a lower relative risk basis than, say, the market or market benchmark, and what is scoring better or what is scoring worse than a market benchmark. And so when we talk about the relative risk concept, or R risk, an R risk reading of 1 is reflective of the same level of volatility on a 3-year monthly standard deviation as the S&P 500 is. So that benchmark reading is 1, and that gives you a reference for how a group or how a fund gauges from a risk perspective. So when we take that risk and then we look at the relative strength, or the trend component that's built into the fund score, we can use these quadrants to get us into kind of the right state of mind in terms of what we're looking for an investment, right? And quadrant 2 is kind of that optimal sweet spot where we have a lower R risk, a higher score. And in today's market environment, from a sector perspective, it doesn't look like we have any groups that play in that quadrant, unfortunately. However, as is the case with pretty much everything that we preach in our methodology, if we're going to own things that are volatile, we certainly want to make sure that they are scoring well, right, and showing high absolute and relative strength. And so we can easily identify a few of those areas in that quadrant 1, whereas quadrants 3 and 4 are going to be lower scoring areas, in some cases lower R risk than the market, and others higher R risk, which is certainly something worth avoiding. And so from here, you can have the quadrants broken down with their group information. And then at the bottom, we have a legend, so you don't have to memorize what I just repeated back to you. But this is a great visual for clients. It allows you to pinpoint some of the areas that you're looking for, and it goes a little bit more in the weeds in terms of some other current states of the market in terms of things such as volatility and the slope or regression line of the asset classes as they're moving through time throughout different market environments. Back to you, Ian.
Wonderful. So with that, with these things that we've covered here, we did get a couple questions actually in the Q&A around the setting alerts, specifically looking at, well, what if you don't want to set alerts on the score of the group as a whole? What if you want to set alerts on an individual fund? So you can certainly do that. If you navigate over to the fund page of any particular ETF or mutual fund, let's say we were looking at PDP like we did previously, you can click on that blue set alert button that you see there on the screen. It's going to be directly above either the point and figure chart or the ETF information page that you see there. As soon as you click on that, you'll notice you can set alerts on the price like you may have done previously, but then you'll also notice for funds, it has that nice score column on the right-hand side. So if you want to be notified of a particular score movement of a particular ETF or mutual fund, all you need to do is go to that individual chart page, click on that set alert button, and then navigate here to this score here. So let's say you want to be notified if BDP moves below a score of 3.0, then you can come over here, you click on that below little button there, it'll pop up your action point, let's say 3.0, and then you would save that alert. And again, the system's going to send you an email to whatever email address is going to be tied in with your account there. So the system will send you an email if there's a change. So great question there, and definitely a good point to highlight.
Absolutely. So as we come to a close here, guys, I think it's worth pointing out some areas where we cover different fund score related topics, right? This has been a pretty comprehensive walkthrough looking at the score and looking at asset class group scores. But if for whatever reason you're looking to get more in the weeds on this topic or other topics, the resources, media and education section of the website is a great place for you. And specifically the NDWU links on the left-hand side. That's a really good spot to see tutorials that cover not only group scores, but also FSM related content, which we're going to cover next week, and the team builder tool, which we're going to cover the week after next. So that's a great spot. Additionally, each week on Thursday and Friday, we put out what's called the Fund Score Overview in the Daily Equity Report. And this is going to be score related content, purely looking at either FSM models, fund score method models, action in the group scores that we covered today, or different tips on things that we think could be helpful for you in managing your practice more efficiently using the score concept. So keep an eye out for those. They go out on every Thursday and Friday Daily Equity Report. And again, just as a reminder, next week's FSM webinar will take place on Thursday at the same time, 1 p.m. And the Team Builder webinar is set to take place on Thursday, May 28th at 1 p.m. So thank you all. Thank you, Steve and Ian, for joining me today. Thank you all for listening and tuning in. We hope to see you next week. And if you have any questions in the meantime, don't hesitate to reach out to us. You can contact us at 804-320-8511 or email us at dwa@dorseyright.com. Take care, everyone, and stay safe.